There are currently 7 things that you need to be aware of that are impacting apartment ownership. And once I'm done, you're going to have to decide for yourself. As an apartment investor, are you in? Are you out? What are those 7 things? Stay tuned. Welcome back to the Apartment Dealer Show. Today, I'm going to discuss the 7 most important things landlords need to consider, need to contemplate as they determine their next move. These 7 items are having a dramatic impact on apartment ownership. And are the stakes that dire? Well, the panel of speakers that I recently had at my apartment owners educational luncheon here about a month ago all felt the same way. And they posed this question kind of as an overarching theme. As a multifamily investor, are you in or are you out? Are you truly in as a landlord, or should you be on your way out, given what we're going to discuss today? And as one contemplates their position as a multifamily investor, it really comes down to strategy. The strategies of 2-3 decades ago, unfortunately, just do not work today. You could have bought just about any property 30 years ago, half managed the property, really not had done much with your rental rates. And lo and behold, you wake up pretty much a self-made millionaire. Today, to be a landlord, an investor, you have to be much more intentional about what it is you're doing as an investor, much more intentional about your strategy in multifamily investments. And you need to be realistic about what is the state of affairs here in California, what it is truly becoming, the landscape, how the landscape's changing when it comes to apartment ownership. And we're going to dig into some of these items, the items that you need to be cognizant of, what is you need to be aware of as you contemplate what's your next move. Where do you sit as a landlord today? First up, the economy. Now, we all know that we've been suffering through some historic inflation. Essentially, since 2020, the cost of goods and services and what have you, up 20% or more, depending on who you ask. And I bring that up always in the context of, well, what does that mean to our clientele? Our clientele being tenants. And obviously, they're the ones that are being impacted to the greatest degree. So post-inflation, what may things look like? Well, financial institutions, many respected people are saying we may see stagflation. Stagflation being, still more inflation to come, yet low economic growth. You have financial institutions such as Bank of America, who said that, stagflation could be a real thing, could become a reality. That would be horrific. Just think of Japan, right? And so that would be horrific for our economy. And again, we're thinking about the impact to us as landlords, given what that would mean to our clientele, to tenants. When you take a step back and look at the economy as a whole, think back to, say, when we had the collapse or the save, we needed to save First Republic Bank and Signature Bank. And there was 3 banks kind of all around the same time. So that made the news. We were aware that, some bad things had happened with these financial institutions. But what you may not be aware of is that was to the tune of $550 billion. And that sort of collapse within financial institutions to that degree has not been seen since 2008, right? When we went through the economic collapse of that time. So these are still things that are, impacting the economy as of today. When we continue on that thread and look at multifamily specifically, here the Federal Reserve in a recent meeting had said that, commercial properties of concern, given the debt on commercial properties. And they actually singled out multifamily. That multifamily was a concern. So even the Federal Reserve understands, the financial institutions understand at large that they have, tackling commercial debt here in the near future is going to be very problematic. Keep in mind that here in 2024, We have about, I think it's $850 billion worth of commercial debt that's coming due. And when I say coming due, meaning that it's either due, right? The loans are due, that you either have to pay them off, refinance, figure out a way to pay these loans off, or they are exiting their fixed period and now the interest rate is going adjustable. And so for many folks, they had a 3.5% interest rate and now it's resetting and say to 7%. And you're talking about that's a dramatic impact on the mortgage payment, thus a dramatic impact on the overall cash flow. And here, this article here. So once upon a time, the financial institutions had about $1.60 in reserves for every dollar of negative commercial debt. Their reserves have now fallen from $1.60 to 90 cents on the dollar for the negative debt that they're carrying. So again, this is problematic within the economy. We need to be aware that this is, while you don't maybe hear much about it, this is a real thing. Commercial financing is a real problem for the economy. And it's not just for today. I mentioned that there's a lot of loans coming due this year. Next year, there's even more in 2025, more commercial debt that, again, the lenders are going to have to figure out if the interest rates haven't gone down significantly, what are they going to do with these investors? Are they going to do workouts, give them extensions? You know, they got to figure out something because it could mean really big problems for the financial institution. Staying on the same thread of the economy, here, California just reached the highest level of unemployment for the entire nation. That's a problem for landlords. Tenants are being impacted. Essentially, what's going to happen with our rental income, right? Will tenants be able to pay their income? I pay the rent. And I know here recently, I've had many of our clients call me and say, Kris, you know what gives? I have a vacancy, and it seems like the applicants either have poor work history, bad credit, little to no reserves. What gives? Well, I think it's a function of the economy. And so that brings us to point number 2, which is rental rates. Now, when it comes to the rental rates, starting in October of 2022, rental rates began to decline. Prior to that, starting in 2020, we had historic gains. So rental rates in 2020, especially 2021, and then most of 2022 were on an upward trajectory, a hockey stick, as they call it, historic gains, the highest gains we had ever seen since they've been tracking rental rates here in the nation. And then things changed in about October of 2022. And then through most of 2023, we continue to see that decline. Not by 15, 20%, but there was a decline. And this chart here shows you some of what that pullback was. So again, marginal, but nonetheless, just being cognizant of the fact that, hey, do not think that the rental rates are going to continue to climb at the rate of which we've experienced over the last few years. At best, they've now flattened. A new report came out that for this year, 2024, Los Angeles County, on average, we might see a 1% increase in rental rates. That's a big difference from what we experienced over the last few years. So again, we're talking about, well, what does that mean to landlords? We need to be cognizant of the trends of the rental rates. Point number 3, interest rates. Here in mid-March, we hosted our apartment owners educational luncheon. The week prior, the Fed chairman came out and said that while they had not been able to lower interest rates as of yet, the promise still existed that they would lower rates 3 times this year. The following week, I'm on stage in front of a couple hundred multifamily investors saying, sorry, that's not the case. If anything, interest rates are going to go up. Not that I'm an economist. I understand. I'm a realtor and an investor. But all the data that I was being given, the articles that I was reading, and individuals that I respect in that space were saying the opposite. How in the world are they going to lower rates when inflation is still a problem and these other indicators that they need to, that they would need to use to justify lowering the rates were not there? If you take a look at this article, Janet Yellen had even said the 10-year Treasury probably is going to hover around 4.4%. And sure enough, and I shared this article at that event, sure enough, 2 weeks later, the 10-year Treasury hit the highest point we've seen since the fall of 2007. What happened after the fall of 2007? Well, not good things, right? We had a financial collapse. So we moved from Janet Yellen, then we go to Jamie Dimon, also a respected figure in this space, who said, look, I'm not encouraging the Federal Reserve to lower the rates. If anything, they need to keep them where they are until a recession is totally off the table. And that's important, especially if you're an individual watching this and you have a loan that's recently come adjustable or it soon will be adjustable. Call your lender. Take a look at the prospects of what a new loan would be, especially if you procured a loan, say, only 4 years ago or so, or 3 years ago. You might not be able to get the same loan amount that you did then because of the increase in interest rates. And even if you can, take a look at the difference in the mortgage payment. And I bring that up because, again, landlords are feeling this. It's changing the cash flow dramatically. Even for myself, I have a loan that started out interest only in 2020. That interest only period is now expiring. It goes, to principal and interest. And obviously, my payment is changing. Now, let's really draw out this idea on interest rates. In other words, what does the increase in interest rates really mean to cash flow and to property values? Now, if we take a look at this chart, you'll see that on the left-hand side there, you have property price, property value, $1 million. And let's say we start at a point in time where the interest rate was 4.5%. So let's say the beginning of 2022, let's say, okay, 4.5% interest rate. And as that interest rate has climbed from 4.5% to say 5%, the change in cash flow, go all the way right, has gone down. In that scenario, the interest rate simply going up half a percentage point from 4.5 to 5. The cash flow went down from 55.19 to 33.49. That's a 39% change in cash flow. Well, now let's say you jump the interest rate to 6%. Now the cash flow has went negative, and it's a change of 121%. And if you take that same building with the same income to today's interest rate of, say, 6.5%, now the total change in cash flow is 164%. That's a huge change. That's why we've had the impact on property values. Investors simply saying, look, if I'm going to procure a new loan at 6.5%, 6.7%, 6.8%, I am not going to pay a 4% cap rate. That cap rate needs to be higher so that I'm not losing money on the money borrowed. So supply and demand, buyers have pushed property or cap rates higher, meaning property values have come down. And again, this is a direct correlation to what's taking place in the world of interest rates. Point number 4, politics and culture. Now, some of you are not going to care for my comments in this segment, but 2 things. Number 1, I respect you too much as our audience to pull any punches, to not be honest with you. Point number 2 is I know some brokers, in fear of loss of listings in business or what have you, they'll just kowtail to anyone who's on the other side of the table. I will not compromise my values and beliefs. And again, what I'm sharing here is because I believe it's helpful to you as an investor, as a landlord, not just to stand on top of a soapbox. And my question to you would be, do you recognize the culture? Do you recognize the culture? Things have dramatically changed since 2020. And again, I'm not some older fellow saying, oh, you kids don't know how good you have it or something like this, right? I'm in my early 40s, but I'm a father raising a family, running a business, and an investor. So I have all these various vantage points. And the bottom line is the culture has changed. You have a situation today where we demonize the rich. Once upon a time, you would have had a father and his small son, and the neighbor goes down the street in a brand new luxury vehicle, and the father would tell the son, Jimmy, that's Mr. Anderson. And, one day when you grow up, maybe you could be like Mr. Anderson and drive a nice vehicle like that if you work hard and get good grades. And it seems like almost now, same scenario, except now the father tells the child, well, Mr. Anderson, he's a greedy landlord, and he in order to get to where he is, he's had to do some unmoral things. And again, essentially, the demonizing of the rich. I would also say in that same thread, we've done things now to enable the lazy. We've encouraged people to not go out and to make a living for themselves. Too many giveaways. And so this is becoming like the underlying current of the culture at large. And then you have the fringes of society that have the loudest voice that are changing the country and, trying to change what really makes this country great, change things about this country that has enabled you as a multifamily investor, many of you, to become self-made millionaires. And if you're not an investor and you're just perusing videos and you came across my video here, you don't own real estate, please understand, the vast majority of landlords do not come from money, did not come from money. When they started out, they didn't have 2 nickels to rub together. They bootstrapped this thing. They painted units themselves and they worked hard and saved all their nickels and started with a small piece of property and improved that property and built up a portfolio over time. And they've always tried to do right by the tenants. And it's not the picture that the media would paint. So I just share that with you if you happen to be watching and you're not a landlord. My suggestion, go out and buy yourself some real estate. Even amidst my comments here today, real estate is a great way to make yourself a small fortune, especially here in California with, typically rental rates go up, values go up. So anyways, there's something to be cognizant of. But again, politics and culture. So this change in the culture has led to essentially a target being put on your back, on my back, simply by being housing providers. Politicians, tenant advocacy groups, and all the rest have put a target on our back. And I don't say that lightly, but essentially they've said, look, you landlords, you can, bear the woes of the economy and we can utilize you to deal with the shortages in housing. And after all, we're gonna change homelessness by putting in rent control, which actually does the exact opposite. It's already proven to do so. But this is where, politics and culture, this is the state of affairs. And so that brings me to point number 5, tenant protections. Because of the change in politics and culture, you have a situation now where literally in the courthouses, there's these tenant advocacy legal groups that raising their hands, just waiting in the wing saying, hey, Mr. and Mrs. Tenant, I'll represent you for free. So free representation, what's that going to mean to you as a landlord? That means that your evictions, your legal proceedings are going to take that much longer and be that much more costly as they try to bluff you heading towards a jury trial. Because after all, what do they have to lose? And you have everything to lose, right? You don't have time to waste trying to wait months on end to collect rent. You don't want to be spending thousands and thousands of dollars for what could be a simple eviction. And now they're just playing the game. So tenant protections, there's, while there may have only been a few groups years ago, today, many, many groups see this as a opportunity and they're opportunistic to make a dollar here. And so essentially with these tenant protections, they've driven a wedge between you and your tenants. Again, going back to that idea of demonizing the rich or demonizing landlords, tenants who otherwise would have a good perception of you as their landlord, just because of the negative content on social media and the rest, they're driving that wedge, making tenant relations that much more difficult. We've had 2 sweeping changes here just recently when it comes to apartment ownership. One of those being that you can only collect now 1 month's worth of security deposit, or a security deposit equal to 1 month's rent. Why is that problematic for both landlords and tenants? Well, I'm sure many of you can relate to this, where somebody applies for a rental unit and maybe, it's not a stellar application, but you're willing to take a chance on this individual. I know I've had that situation where I see myself in the applicant when I was just a young man starting out. Didn't have the best credit history, didn't have the best employment. But these type of individuals, you take a chance on them though. You want to help them out. So long as they can pony up a little bit more security deposit so that you're able to mitigate your risk, you're willing to give them a shot. But now if you can only collect 1 month's worth of rent, well then no. I mean, you can only rent to somebody with a stellar application because 1 month's rent does nothing. If they live in that unit and even just minor wear and tear to the unit, I'm not saying they even thrash the unit, but just minor wear and tear, 1 month security deposit, it doesn't do much in the cleaning up of that unit and getting it rent ready for the next tenant. So this is a part of, driving that reg. Now, the other second change that I said there was two, the second one here is background checks, right? So again, you receive an application as a landlord. Maybe some areas are not stellar, but if you can know everything about the tenant's history in terms of the criminal history and so on and so forth, you'd give that person a shot. Well, now they're saying, no, you can only look into parts of a person's history. Say, you know what? No, because from what I can see, too much risk here. I'm going to wait till somebody has a stellar application. This hurts tenants. And so if there's tenants listening or those that have some say in this area, again, it's only going to do the opposite. You think you're helping tenants. It's only going to do the opposite. Share in the comments if you think somehow it's going to help this scenario, given what I just shared with you, the reality. I understand if you're theorizing on a cloud, but if we're talking about reality of renting units here in California, really renting units anywhere, this is the reality. Many landlords are looking to assist people to get housing, but they need to be able to understand who that individual is. They need to be able to mitigate their risk financially. You handcuff them, guess what? That just creates more shortage of housing. From tenant protections, we move to point number 6, which is rent control. Now, I mentioned earlier, rent control does the exact opposite of what it intends to do, right? Because what happens? Tenants that are paying extra low rents do not move on. They hunker down. Doesn't create any more housing. So now it only exacerbates the shortage of housing. And many landlords who prior to rent control were not increasing their rents that much annually now have decided, hey, I have to raise my rent to the maximum allowable increase every year. And I cannot tell you how many of my clients or just landlords in general contact me and share, you know what, Kris, before rent control, we try to work with the tenants. We didn't want to raise the rents too much year to year. But now because of rent control, we're raising it to the maximum. The exact opposite of what they thought rent control would do. Well, in that threat of rent control, what's happening now? You have individual cities that have taken it upon themselves to say, you know what? We know better than the statewide rent control. We know better than the county. Some counties, like unincorporated Los Angeles County, has its own version of rent control. We're going to put another layer of rent control where you cannot raise your rents the 10% maximum. You can't even raise your rents 5%. One city in particular, Bell Garden, says that it's half of inflation. Half of it. So if inflation, say this year is 3.8%, you can raise it half, 1.9%. I mean, you're not going to get anywhere very fast raising your rents at 1.9%. And Bell Gardens is not the only city that has its own ordinance. Do you have a local ordinance governing your properties? If you're not sure, you should call the housing department and say, hey, do we have a local ordinance here? Something that goes above and beyond AB 1482, the statewide rent control. Be surprised how many cities do now. And so this hurts landlords if they cannot keep pace with inflation, as they had certain projections on the income of their properties headed towards retirement or through their retirement. I mean, that changes everything. But the nail in the coffin will take place this November 2024 in California. If you're not aware, all Californians are going to vote on a ballot measure called Justice for Renters Act. What does Justice for Renters, this act, propose? Well, proposes 3 things. Number 1, single-family houses, which are not under any rent control right now, would be under rent control. So all those of you that invest in single-family homes or had been, as soon as statewide rent control had been passed for multifamily properties, you said, you know what, I'm going to go buy single-family homes because they don't have rent control. If this passes, all your single-family rentals would be under rent control. Number 2, regardless of construction built or the year a property was built, those properties would be under rent control. So right now, under statewide rent control, if a property was built within the last 15 years, no rent control. This thing passes, everything's under rent control. But the most important component of this is, and the most deadly, the most lethal, is vacancy control. Vacancy control, meaning that if you have a tenant vacate a unit, you'll have a politician determining how much you can rent that unit for. And it probably will be one of two things. Either you'll only be able to raise the rent a percentage above what the previous tenant was paying, or your local politicians will determine, well, 1 bedroom should rent for this amount, 2 bedrooms should rent for this amount. And I'll tell you what, they're not going to be using the highest rents that you find on Zillow. No, they're going to use something more middle ground. So for many of you, say, who were caught flat-footed by rent control, and you've been waiting for vacancies so that you can not only increase the rental rates, but so that you can go in and do a thorough rehab, would it be worth the money? Again, the unintended consequences that this is going to do the exact opposite of landlords not putting in capital improvements into their property. Well, how can you afford to if, again, you cannot raise your rents to market at least when you have a vacant unit? So again, justice for renters calls into question vacancy control. This will be on the ballot this year in California. You need to rally the troops and have people vote no on this because, again, you and I, we cannot afford to have, of all things, our vacancies controlled by the politicians, somebody else telling us how much we should rent those units for, as opposed to letting the open market determine what those rates are. Okay, so let's bring it all home. Because of the situation with the economy, tenants are struggling financially. Because tenants are struggling financially, rental rates at best will be flat. What does that mean to your rental income? As we take a look at commercial debt, for many of you, you may have loans that are now going adjustable. What does that mean to your overall cash flow? Big picture, if we see more defaults in the market, what's that going to mean to property values as a whole? Politics and culture, you have individuals that are essentially trying to oust quote unquote mom and pop landlords. Many would argue that they want your properties. You hear this more and more, that the government wants your properties for housing, something to be cognizant of. Because of the culture, you have more and more tenant protections. These tenant protections are driving a wedge between you and your tenants, making things much more litigious. And it's essentially becoming more risky to try to navigate the laws surrounding multifamily ownership. It's almost making it impossible to not step on a landmine here. We need to be cognizant of what's changing. And then, of course, rent control. Do we have a local ordinance within the city we own, or what rent control, what version of rent control are we under? And then, of course, vacancy control, the Justice for Renters Act. If that were to pass, that means nothing good for apartment values. It means nothing good for cash flow. It means nothing good on the trajectory for multifamily ownership. And so, again, these are things that we need to be aware of as we're contemplating our next move, as we're contemplating buy, sell, hold. These 7 things, these are a reality. These should be top of mind. So what are you going to do? You could put your head in the sand and try to pretend like none of this is going on. You could fact check me, and I encourage you to do so and ensure that everything that I've laid out here today is in fact true. And based upon your findings, then do a SWOT analysis, right? We do this in business. SWOT, analyze your strengths, your weaknesses, opportunities, and threats, right? When it comes to your real estate portfolio. And then the big question, are you in or are you out? Are you in? If you say, okay, you know what, I'm willing to weather the storm. Okay, then. So you're in. All right. I'm in at this point in time. So how do you insulate yourself then from the threats that exist? Do you have the network of professionals that you can turn to, whether it's legal, financial, and otherwise, that can assist you? Because the waters may be rough now, but as we go on this white water rafting trip of multifamily ownership, it is only going to get that much more difficult. At our recent educational event, Mike Brennan, the eviction attorney, shared with the attendees not only the recent laws that had changed. There's like 20 some laws that changed this year that maybe aren't aware of that when it comes to multifamily ownership. But then he discussed the new laws that are being dreamt up by the politicians. You can't imagine some of this stuff that they would even come up with these types of laws. And if they were to be passed over time, again, doesn't mean good things for apartment ownership. So again, if we're in We're going to insulate ourselves, figure out how do we deal with these threats. Also, you probably want to do an analysis of your equity and debt position. How much are my properties worth? What's my rate of return on equity? Do I need to reposition my debt? Rental rates. What can I do with my rental rates today? Are there opportunities to reposition tenants and so forth to increase my rental rates? There's still opportunities to do that, strategies to do that. And then economies of scale. With in light of everything that I've shared here today, individual that owns 50 units is going to be able to weather that storm much better financially than say an individual that has 5 units. So it really becomes economies of scale. If you're in, then we need to contemplate how do we grow our portfolio over time to amass that much more cash flow, that much more equity, so that we have the ability as things become more complex to deal with the situation at hand. Economies of scale will win. And again, that's for those that are in. Well, how about if you're out, in the sense that you're aware of these items and you began to contemplate, okay, maybe it's time for me to sell. If that you begin to, or maybe you haven't even thought out that far, but what about the children, your heirs? You're holding the properties for your children. Have you had that discussion? Have you had the discussion of children? Do you want to be landlords? Children, do you want to be in partnership with each other? Because essentially that's what happens. Once your children inherit the properties, you now have made them business partners. That works for some families, doesn't work for others. And so I've seen, some very ugly situations where literally children don't speak because of the money involved with the various properties. So we have to contemplate that question. That takes a family meeting, right? In terms of, okay, do the kids want to be landlords? Can we see them being in business with each other? Because, everyone has their own financial means. In the end, some will want to sell, some will want to hold. Those that want to sell are going to feel like they're being held hostage by those that want to hold. And those that want to hold can't understand why their siblings would want to sell. And again, it's tough, right? When they have to vote on these things. So that's part of the equation. And then, okay, well, how do we mitigate taxes? What are we going to do about cash flow? Should we sell our properties? What's going to replace that cash flow that we were earning from our properties? What alternative investments exist that say are not, we're going to remove ourselves from the situation of multifamily ownership, given the complexities and everything else. But then what are the alternatives? So this is a lot of work that we do with investors day to day, helping investors either grow, right? Do that analysis in terms of what are the opportunities for them, or for those investors that are looking to exit real estate altogether. Okay, well, how can we replace your cash flow, mitigate the taxes, and put them in a situation that is in alignment with their overall financial goals? We'd be happy to assist in that way, but that is a lot of the work that we do here at the Apartment Dealer. So, somewhat of a tough love conversation today. Believe me, it's tough to have this conversation because I would hate for it to be seen as fear-mongering. I'm simply trying to ensure that landlords have the facts, that if nowhere else here, we're keeping you abreast of what are the changes taking place on the ground, what are the things that you need to be cognizant of as you contemplate your next move. Buy, sell, hold. What is it that you should have in mind as you determine, okay, this is the next right move for me. I hope you found today's show informative. If you haven't already, subscribe to the channel. Again, we got hours and hours of free educational content here available for you to assist you in the building of your financial legacy in multifamily properties. And we have plenty of new content to come. Give the video a like. That helps us get this video into the hands of more and more landlords so they too are informed. And until next time, this is Kris German, the Apartment Dealer, wishing you positive cash flow, tenants who behave, and much protection from Uncle Sam. Till next time.